Isn't farmland always hard to buy though? And don't you always wish you bought more? Like Tim, you're talking about how you get up in the morning, you brush your teeth, and you do the dangerous opportunity strengths question on strategic coach there. You're Dawson every day. If we're meeting here from 3 years from now, like, wouldn't you wish that you bought more land even though it's high?
Yeah. And you know what? And I'll give the example. My dad bought land. He bought 3 quarters in 1981 at $80,000 a quarter, right? And that felt hard. And it felt like that land wouldn't pay for itself. He still has that land, right? And so for 27 years, it maybe didn't look like a great investment, but he didn't buy it as an investment. He bought it as an input. He needed land to farm, right? And if you're going to farm, you're going to produce grain or whatever, you need land to go with it. And so you either buy it or you rent it. And so really, I think if your goal is 40 or 50 years long, and as long as you can service the debt on it, then I think you can buy at the top of the market and it still will work. I mean, obviously you want to buy at the bottom of the market, but that's not always the opportunity for you too. So, and I've heard this for 35 years, land will never pay for itself, yet somehow it does.
Well, let's just say that we're overbought, and let's just say that technical analysis isn't going to, prove to be wrong in this case. And let's just say there's going to be a pullback. How would you know? What would that look like? When should you start buying the dip, and with what? Hopefully you have some money for the dip. Do you got some money for the dip there, Tim? You've been waiting, dry powder?
I could convert my gold into farmland. So
you'd have to dig it up in the forest, though.
Right. Yeah.
The tobacco tins in the forest.
Trent, maybe you comment on that first.
Well, your time frame is everything on this, right? So if you are young like your father was in 1981, it took 33 years for that land to get back to its same inflation-adjusted value to have the same purchasing power. And if you're young and you need it for your operation and you can survive those 33 years, then great, right?
Yeah.
A lot of people didn't survive those 33 years.
Yeah.
And a lot of people weren't able to. You had some experience of that coming out of university.
Yeah.
Some people, I remember when I graduated university, there was no encouragement for me to go farming. Like, it was go to university, get a good job. Of course, I guess I'm a bit of a contrarian. I thought I should go farming. And
just had to disagree. Hey, you just couldn't agree.
Yeah, I just can't. Yeah, I can probably might explain some relationship problems. But
yeah, I don't know. We got time to get into that today, Tracy.
Yeah, we don't want to talk about my.
Let's put a pin in that and circle back.
Maybe I'll just lay on the couch here and tell you all my problems. But yeah, anyways, so that was a tough time. I saw a lot of people exit the market, and then we saw a bit of a turnaround in the late 90s, and then some other people exited the market in the first 5 or 6 years of the 2000s, and I was one of them. And there's a saying in the market: what doesn't scare you out will wear you out. And I think a lot of people thought, look, at this land has gone up 10% over the last 30 years. You just don't see the light at the end of the tunnel, and there's other ways you haven't got a return on it outside of some rents, which is something, but it wasn't moving the needle for anybody. So yeah, I mean, if you're 60 or 70 and the land starts to, if the land starts to correct itself, you might want to reassess. If you have the time frame to wait this out another 7 or 30 years or 46 years maybe, right?
A little bit depressing. I mean, when I look at this chart, we think about Bitcoin, right? This is a great example because at 120K, it was going to 1 million. And you're like, oh, I got to get some Bitcoin. I got to get around and figure it out. I got to buy some Bitcoin. Now it's 70. Nobody wants it. It's going to 0. And, so I'm wondering what the landslide, if there ever was one, and I'm not saying that there is one, imminent, and I think there's a lot of buyers that would continue to step in on farmland. Well, they should, but I'm just thinking, like, what does a 10 or 15 year decline of 50% look like for people that are in the game when you're already, like, on Thursday, we're having a webinar talking about farming for what? 4 producers lined up. Not all of them are saying, like, there's nothing in it this year, but very little ROI for the capital that's invested on a $20 million farm when you're looking at making 200K. If you get a damn good yield that your agronomist says, well, we're going to need the rain. What the hell is that? Any comments on that?
Yeah, in our video, like I asked Trent, like he said, we're approaching this, and I said, "Are you seeing a sell signal?" And he said, "No, I don't see a sell signal. It's a point of interest." And I said, "What does trigger a sell signal?" He says, "If you move across that line, which at this point might represent like a 5% drop in prices. So technically speaking, then that's a sell signal." So, and what I'm seeing, even from this poll here today, right, that's a shift in sentiment. And I like to think I know lots about farmland, but really I'm an expert in behavior as it relates to farmland, right? I see people pay premiums and sell for discounts because of the emotions involved. And that's not wrong. But the farmland market, it is emotional, even though we like to think it's academic and make perfect decisions. People do make perfect decisions, but it's perfect for them in their situation, right? The neighbor might not look at it and see it that way, but for them it is. So I just think that once behavior starts to change, then it's going to carry momentum.